Hello, this is Japanese Economic Review Channel. Today, we will analyze Japan's Tertiary Industry Activity Index for March 2026. This briefing diagnoses the current consumer standstill against the underlying B2B resilience in the service sector. Let's explore what the data reveals about our economic trajectory. The overall index stands at 105.7. While we see a short-term pause with a MOM drop of 0.2% for the second consecutive month, the resilient long-term trend continues. We are marking the 24th straight month of YoY expansion at plus 2.6%. This is a temporary adjustment, not a structural decline. Looking at the MOM changes, the 0.2% headline drop is a tug of war. Living and amusement services dragged the index down by 0.23 points, followed closely by wholesale. However, this was heavily countered by positive contributions from information and communications and utilities. A clear split defines our economy. Broad-ranging business services grew by plus 0.4% MOM, supported by steady corporate transactions. Conversely, broad-ranging personal services fell by 0.7%. The current standstill is highly concentrated in consumer-facing operations. This heat map tracks sector momentum. By late Q1, momentum visibly stalls out. Notice the clustering of contractions across wholesale and consumer sectors in February and March. Meanwhile, information and communications flipped back to positive growth, illustrating sector rotation. Consumer discretionary spending is pulling back. Living and amusement fell 2.5% MOM, driven by eating and drinking places. Wholesale dropped 2.2%, heavily impacted by building materials. Medical and welfare saw a brief 1.0% MOM drop, but retains a massive 3.4% YoY surplus. Conversely, critical sectors propelled growth. Information and communications rose 1.5% MOM, fueled by strong information services and video/audio production. Utilities surged 2.6% due to electricity. Retail trade also remained surprisingly robust at plus 0.8%, led by auto sales. Let's spotlight information and communications. It reached an impressive index value of 120.0, driven by consistent demand for IT services. With a plus 5.1% YoY growth, this sector has fundamentally decoupled from broader macroeconomic stagnation, representing structural growth. This matrix maps short-term momentum against long-term growth. The divergence is stark. Tech and telecom sit comfortably in the accelerating quadrant. Meanwhile, wholesale and amusement are firmly in the contracting zone. The economy is clearly polarized by sector. An interesting divergence. Wholesale trade dropped 2.2%, yet transport and postal activities remained completely flat at 0.0% MOM. Physical logistics haven't collapsed. This suggests the wholesale drop is driven more by price and inventory adjustments than a halt in physical goods movement. Finance and insurance show high volatility, with a 14.2% YoY explosion artificially driven by financial product transactions rather than baseline economic growth. Meanwhile, real estate provides an absolute neutral plateau at 0.0% MOM, offering neither drag nor lift to the broader index. To conclude, this standstill is primarily a behavioral pullback in consumer spending and inventory adjustments, not systemic failure. The structural B2B resilience and the 24-month unbroken YoY expansion prove that the overarching recovery arc of Japan's service sector remains thoroughly intact. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.